Hi, this is Michael Rony Mullick, and you are watching the post market show. And today, markets opened with a gap down, continued to fall, but there was a sharp recovery in the second half, and it brought the markets higher. And we know that the markets, we were waiting for the US jobs data today and also the unemployment data. And we were expecting the markets to fall, but in fact, our markets, Indian markets, were bullish, and it ended near the day's high. In fact, Bank Nifty broke the day's high and closed at the highest point of the day. So that was very interesting. But US jobs data has been released and it does not look good. And the US markets are reacting to it right now as we speak. It is down 2-3% US indices. So things are again turning bearish in the global markets, is what we are seeing. So let us start the show, and let's discuss the things that has happened today. So Nifty, we opened with a gap down, and markets continue to move down. But 9:45 there was a huge candle, almost 70, 60, 70 points candle. But then it could not be sustained. Markets fell. 17,220 was tested as a support, and then markets recovered from there, and it closed somewhere around 17,314. That is the weighted average closing. So what we are seeing is after a good recovery, Nifty has ended 0.1% in the negative. So that is good. Back Nifty even doing better, opened with a huge gap down, continued to fall, broke 39,000, came very close to 38,800. From there, a sharp recovery happened, and from 3:30 onwards, market opened and ended near the day's high at around 39,200, very close to that. So Bank Nifty had a great day. And if you look at the charts on a daily and weekly basis, the markets are looking slightly, it's a hammer candle forming. So this indicates reversal in the markets. This means the buyers were strong today, and they in fact have they were strong against the sellers. So it was the buyers who took the markets up in the second half. And even in the weekly chart, if you look at that, in fact, Bank Nifty had a better week than the last week. It ended in the green. So the candle has long wicks on the upside as well as downside, but on a close to close basis, it ended in the positive, is what we are seeing. Coming to the Nifty as well, Nifty weekly chart shows a bullish candle. So at least it was better than the last week, and last week's low was around 16,700, 750. And from that, this week the candle looks better, slightly positive, but again we are succumbing to the global pressures, is what we are seeing. So SGX Nifty already indicates almost close to 200 points gap down. It is at 17,122. So let us see where US markets end. That is going to be important. Apart from that, let us look at the other things that has happened today. Nifty mid caps were down 0.24%, but it was Nifty small caps which did pretty well. It is the only indices which ended in the green today. And come to sector wise, it was mixed mostly, and most of the large cap sectors they fell today. So Nifty FMCG down by 0.64%, and Nifty IT down by 0.7%. Nifty IT had a bad day. Almost the entire fall was contributed by TCS alone, 1.1% down. So it was TCS which is responsible for the fall in the IT index. Apart from that, sectors which did well are the Nifty private bank. Definitely the private banks were strong today. It was the private banks that took the markets higher, and the PSU banks did not do well. It is down by 0.23%. And apart from that, what we are seeing is most of the sectors ended in slightly negative or slightly positive. So nothing much to discuss over there. And we'll go directly to the index movers. It was Titan, which was the highest contributor to Nifty 50 on the positive side, almost 5.3% up. Then Reliance Industries, we have HDFC, L&T, Bharti Airtel Power Grid. These are the top gainers in Nifty 50 today. And talking about top losers, it was TCS, obviously dragging the IT index down, and then State Bank of India, HDFC Bank, ITC. These were the top losers today, but again nothing significant. The fall wasn't that much. So this is the overall picture today FII, DII buying and selling activity, if you look at it, FIIs have sold for a massive 2250 crore, 2250 crore, and DIIs have bought for 545 crore. Still, the markets went up towards the end, and that is what we are seeing. Now, come to the jobs data. US unemployment rate came lower than expected. 3.7 percentage was the expectation. It came at 3.5 percentage. And if you look at the non-farm payrolls, the job expectation was 250k new jobs to be added. It came better than expected, 263k. Now, this is obviously, when you look at it, it looks positive. Definitely a lower unemployment rate, a higher jobs addition is definitely good for the economy, but the condition right now is, since the inflation rate is rising all over in the US, and since the more jobs are being added, that means people will have more money and they will spend more. That will lead to further rise in inflation. So this is a bad news, because the Fed will now fear further rise in inflation, and they will hike the interest rates even higher, and that is the main cause of the problem. So a higher interest rate is definitely bad for the equity markets, and that is the exact reason why US markets are reacting very, very negatively to this data. And right now, if we look at the US markets, let us look at where it is trading, and you will understand the magnitude of the fall, why it is bad, because US markets are down more than Nasdaq down more than 3.4 percentage. It continues to move down, open with a huge gap down, and it continues to move down is what we are seeing. So definitely bad for the markets. Nasdaq falling like there's no tomorrow. Then we have S&P 500 down by 2.56 percentage and falling further. Dow Jones down by 1.9 percentage. So definitely it is a very, very bad situation for the US markets. And if you look at the weekly charts of the US market, so the green candle which you are expecting, it is a further fall is what we are seeing, a tall wick forming, and then markets are closing inside last week's range is what we are seeing in Dow Jones. Same with Nasdaq as well, and S&P 500 also same. So global pressures are again on the negative side, global sentiments are on the negative side, and Monday definitely we can expect a huge gap down, and still there is around the US markets will close around 1:30. So we have a good time is 10:30, 11, 12, 1. So around 3 hours left, but not expecting any miracles to happen in the US markets. So it should end in the negative, obviously. So if that happens, again, we can expect a gap down opening, and from there, what lies for us is going to be important. So because of the US jobs data, you can see that the 6 o'clock candle, it came out at 6 o'clock, and 6 o'clock candle DAX, this is the German index, a huge red candle forming, continued to fall. Same if you look at all the indices, French index, same reacted negatively. UK markets, same, you can see the negative reaction in this red candle. So the markets are not happy, and it is falling, and US VIX has risen by 3.46 percentage. It is at 31.6, once again above 30 for I think 1 or 2 days it came below 30, and now it is again up to that level. India, on the other hand, it fell today and then it recovered, and on a close to close basis the India VIX fell by 2.6 percentage. So India VIX is way lower than the US VIX. It's at 18.8, whereas the US VIX is 31.6. So that's a huge difference, almost close to double is what we are seeing in the US markets. And one more thing, the crude oil prices are continuing to going it is continuing to going up, and that is going to be bad for the Indian market. But Reliance Industries, it is good for them because they can sell the crude oil at a higher rate, and that is why we can see that Reliance Industries today as well, it was pretty firm. In fact it was up today. So that is crude oil prices, it is going up is what we are seeing. And coming to other things, we have if you look at gold, gold prices, it shot up, but again it is consolidating at the higher levels is what we are seeing. And dollar index, we have to watch out for that. Indian rupee, yes, Indian rupee again hit a fresh all-time low today. It is the highest point of the lowest point of the rate was 82.61. So it continues to depreciate even further, and it is not just the Indian currency, it is all the global currencies are pretty weak, and it is because of the dollar index rising. DXY is at 112.5. So dollar index again it made a low of 110, but now it is trying to go up again, and that is again a bad news for the equity markets. So India is clearly trapped between good local cues and bad global cues is what we are seeing. So the closing was good. We see that buyers were active, but then global markets are negative tomorrow, expecting huge gap down on Monday now. What will happen to the markets when it opens on Monday is going to be interesting. Will there be a huge buying after it opens with a gap down, or the markets will fall even further is what we have to see. Open interest wise, people have sold put options today. Yesterday it was one-sided call selling, but today people have sold a few put options. Back Nifty is slightly bearish, 0.86, but a lot of straddles being traded at 39,000 is what we are seeing. Ahead on Saturday and Sunday is a holiday, and people have made straddle at 39,000. So we have to see how that opens. And in case of Nifty as well, today good amount of put Y being added. 17,200 added the highest amount of put Y intraday, and even 17,000 as well. But on a close to close basis, the if you look at the highest amount of call build up, it is at 17,500. Yeah, 17,500 has the highest amount of call build up, and even today as well it added huge amount of Y, and 18,000 also added huge Y. So overall people are expecting Nifty to be little less bullish. Back Nifty can be slightly more bullish, but we have to see how the things end in US, and where do we open on Monday is going to be very interesting. And we are expecting a huge gap down, as I've already said, more than 200 points down in Indian markets. And again, like I said, Indian markets, we have to see how the things happen over there. So apart from that, if we look at our markets, we can expect 17,200 to be held on the downside, and on the upside 7,200 is an important support. If today's low is broken, you can expect further downfall towards 17,000 or even lower. So SGX Nifty is already indicating a low, and let's see what happens in our markets. We will discuss all of those in the Sunday's week ahead show, where we will discuss the data that is going to be coming out next week. We have a lot of data as well that is going to be coming out, so all those will be discussed on the Sunday live session. And for now, let us call it a day, and I hope you have a good weekend, and yeah, catch you again on Sunday. Thank you for watching.